Hi there, you have tuned into Your Trades on ET Now. I'm Shrishti Sharma and with me is Shreyansi, and over the course of next 30 minutes we're going to be highlighting what big happened in the markets throughout the day, and not just that, also get you ready for tomorrow's trading action. But Shreyansi, since it's the last trading day of calendar 2024, seems like it's been a decent end to this calendar year, though we have seen a single-digit gains on the Nifty 50 for this particular year, but the mid and the small cap index have surely done pretty well for themselves.
Well, absolutely, and not just that, it's just the realty pack that we've seen cementing a lot of gains this year as well. When you take a look at pharma as well, that also got a shot in the arm from a host of triggers coming in. So when you take a look at the top Nifty gainers, you do have Trent making it to that list on the back of that 127% thereabout gain coming in this year, doubling its stock price in fact for the second consecutive year, and that is Trent for you. Even when you take a look at M&M, that's been quite the turnaround story as well, has had its best year in terms of returns since 2009 as well. 73% thereabout gains is what you're looking at for M&M as well, but it's been IndusInd Bank largely that has been a drag. 40% declines is what you're seeing, at least on a year-to-date basis. So exposure to microfinance, other than that, you did have that coupled with a surge in slippages. That is something that dragged on that particular counter. But when you take a look at sectors, then realty and pharma were the sectors that were shining with 40% sectoral returns as well on a year-to-date basis. Like I mentioned, realty cemented gains, and you did have pharma as well gaining. Now, we do have 2025 kicking off with mixed December auto dispatches. That is something that Srishti tracks very closely. And then in terms of ITC as well, that's the one counter to watch out for, at least on a daily basis, because they're going to be unlocking value for 36 lakh shareholders, because you do have that much awaited demerger that is going to come into effect from tomorrow, that is January 1st, and the record date is set for January 6th as well. So that is the one that we're watching out for, because you do have ITC that will be transferring cash as well as cash equivalent to the tune of 1,500 crores to ITC Hotels. That's the one to watch out for. And lastly, a couple of those counters on account of order wins. I'm talking about RVNL as well as Mazgaon Dock that we're watching out for. RVNL on the back of that project coming in from Central Railways as well as East Coast Railway, and Mazgaon Dock on account of that Ministry of Defence deal as well to the tune of about 1,900 crores thereabout. So even that stock was buzzing away in trade. Saw some little bit of profit booking at the end of the day, but RVNL still clutching on to some of those gains that we saw coming in for that counter.
Alright, so those were the buzzers in trade right now, but for this, let's move on and let's connect with our expert for today, and let's understand what should be the strategy for the benchmark indices, as well as which are the stocks that you can eye on. And with this, let me welcome Rajesh Bhosle, who is joining us right now from Angel One. Hi Rajesh, very good afternoon. Thank you so much for your time. First up, help us with your take on the benchmark indices, because both the index have seemed to be taking support at its crucial levels, a bounce back from the day's lowest point. But how do you see this trade panning out in the next couple of days?
Hi, good afternoon. And they say all is well that ends well. And after a gap down, if there is no follow-up selling and if there is recovery like this, then it indicates that the bearish momentum is fizzling out. As you highlighted, 23,500 is a very key support for the Nifty, where we are seeing 50 weekly moving average, and similar for the Bank Nifty, 5,500 is the 200 DMA. So market is currently holding on to it. To add a point, the long short ratio is currently placed at 14 levels, which is around its historical lows. So somewhere the bearish momentum is fizzling out, and as long we hold 23,500 and for the Bank Nifty 5,500, we should expect that this bounce will continue in the new year.
That is something that we see continuing through the new year as well. But Rajesh, this is a question that we've been asking you through the year, and this is the last time that, since it's the last trading day, which are your top picks that you have pointed out for our viewers then?
So no doubt, pharma space have performed well in the last 1 week, and we expect this positive momentum to continue in pharma and healthcare space. So one of the counters that I have picked today is Laurus Labs. So Laurus Labs is already in a strong uptrend, continuously moving in a high top, high bottom formation. And today we witnessed that it has crossed its previous swing high with strong volume. We expect this positive momentum to continue. Laurus Labs can be bought with a stop loss of 589, and a stop loss can be placed with a stop loss of 589, and the target can be kept at 630. My second pick is from the FMCG space. We expect that after pharma, FMCG space can be the next sector that can play the defensive role. And at current risk reward levels, Tata Consumer looks good with a stop loss of 892. We are seeing a base formation and a range breakout on a lower time frame, expecting a target of 965 in the near term.
Right, so those are the top bets coming in from Rajesh, trying to play some of the defensives there. Laurus Lab as well as Tata Consumers making in on his list. But with this, Rajesh, we'll let you go on that. Thank you so much for taking the time out, and Happy New Year to you and your whole team. Looking forward to connect more in the upcoming year.
Same here. Happy New Year.
But with this, viewers, let's move on, and it's time to get some word from the wise. We're in time now for some market opinion coming in from Punita Kumar Sinha, where we had her take on the valuations, the earnings, and what lies ahead for the market, and what are the key triggers that one should keep an eye out in the new year. Let's go across and listen into her.
My view for 2025 would be that focus more on India's own domestic consumption story and be invested in companies that are not as exposed to the global markets, given all of the turmoil that we might see from announcements that come out in the US. And also US yields are trending higher because of the risks, and uncertainty that could emerge. And so I think it's a year that you need to be flexible, agile, because these announcements could actually create value and opportunities as well, and could also create some stress.
All right, and that was a word coming in from Punita Kumar Sinha. Time for a very quick breather on the show. On the other side of this break, we have more news and updates for you, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get to the derivatives roundup then. And when you take a look at the index futures trends for December expiry for the Nifty, you largely have a flat sort of build-up coming in. And when you take a look at Nifty Bank, there's a short build-up that you're looking at least when it comes to the index futures. But when you take a look at India VIX, slightly cooled off from the levels that we saw earlier in the day as well. 14.4 is where that one was at. And when you take a look at active call levels, call writing was observed at 23,700 as well as 23,800. And in terms of key resistance levels, you're marking 23,800 for active calls. When you take a look at active puts as well, you're looking at put buying being observed at 23,600 as well as 23,500. So that largely is how the derivative roundup then is shaping up like.
Alright, so that's the derivative data for you all. But moving on, let's shift focus to the big story of the day, and we are putting the spotlight on ITC today, as the company has announced that ITC Hotels will be listed on the stock exchanges within 60 days of receiving the NCLT order of December 16, which would mean that around the third week of February, we can see this listing happening. And this will offer a value unlocking opportunity, with shareholders getting 1 share of ITC Hotels for every 10 shares of ITC being held. How will this impact the company and how the company will be valued given this scenario? Snehi joins it with a detailed explanation. Snehi?
Well, absolutely. When it comes to ITC, this is going to be a stock to watch out for in today's trade, because 1st of January is the appointed date and effective date of the scheme of the demerger of ITC Limited as well as ITC Hotels. 6th of Jan is the record date to determine the shareholders who will be eligible for the same. And within 60 days from the NCLT approval, the Kolkata approval that the company has got, which is December 16, within 60 days of this, ITC Hotels will have to be listed on the bourses. The demerger structure then, ITC shareholders will get 1 share of ITC Hotels for every 10 that they currently hold in ITC, and ITC Hotels will issue equity shares to ITC shareholders, which will be roughly 60% of the holdings, and 40% of the remaining holdings will be held in ITC Hotels by ITC Limited directly. Now, transfer of intellectual property, that is the latest news flow that has happened last evening. ITC and ITC Hotels have executed a trademark license agreement wherein ITC Hotels will get the ITC trademark, the logo, the Bukhara, Dampak, Dakshin trademarks as well, office and managerial staff, and most importantly cash and cash equivalents worth of 50 1500 crore rupees. Now, ITC Hotels growth plan, the outlook that they have given is they target to open at least more than one hotel per month for the next 24 months, and their 5-year outlook is they're targeting 200 plus hotels with keys of more than 18,000. So that is some significant targets and some lofty targets that they have cited. Now, when it comes to the valuation, this is going to be the most important part to understand. Let's assume that the FY25 EV to EBITDA is 25 times. This we are assuming, keeping in line with its peers EIH as well as IHCL. When you assume this, the implied market cap of ITC Hotels becomes roughly 29,500 crore rupees, which makes its implied fair value. The listing that we are expecting is anywhere between 141 and 150 rupees. Now, if you take a look at ITC's share, then that comes to 11,740 crores. Remember, there's a 20% discount for the holding company, so that brings the stake down to 9,392. The total shareholding will be worth 9,392, which means when you run the numbers, the adjusted share price of ITC Limited post the demerger is expected to be anywhere between 470 and 473 rupees. So that's the price band that we're looking for ITC post the demerger, and anywhere between 110 to 170 for ITC Hotels when and as and when it lists on the bourses. So these are all the numbers that we have run. Of course, this is quoted to SBI Securities, all this number crunching, but this is what the ITC demerger is expected to pan out like.
Well, absolutely. And on the back of that, tomorrow we're going to definitely be keeping an eye on ITC, but there's a host of counters that were buzzing away in trade, the likes of Railway Vikas Nigam, as well as Tata Chemicals. In fact, Rabinder is standing by with more details and the entire list then.
RVNL is in focus, where company has emerged as a L1 bidder for one of its two projects. First is from Central Railway, and the cost of the project is 137 crore, and the second is from East Coast Railway with a total cost of rupees 404 crore. Moving to the Tata Chemical is also in focus, where government has announced a minimum import price for soda ash, and the scheme will be effective from June 30, 2025. Apart from this, Indus Tower and Vodafone Idea is also in focus, where Citi has come out with a note on both the stocks. And on Indus Tower, Citi has maintained its 90-day positive catalyst with target price of rupees 485. They say that the improved visibility of dividend reinstatement in Q3 and Q4. And on Vodafone, they have maintained a buy rating with high risk rating with target price of rupees 13. They say that with clarity on that funding will be a key stock catalyst going ahead. Apart from this, Ashoka Buildcoin is in focus, where Ashoka Buildcoin and its arm to sell 11 SPVs to Epic Concession to Infrastructure Real Trust EAAA India Alternative for rupees 2324 crore.
Alright then, thank you so much Rabinder for getting us all those details. But for tomorrow, all eyes will be on the December auto sales data, because this particular month has been fairly good for the companies across the segment. We are seeing minor green shoots across the segments, and the case in point being the passenger vehicle segment, where we are aware that the company's key focus always remain on pushing the inventories at the year end, but consumers are also taking note that there could be likely price hikes starting from the January 1st week itself, and that's what actually supported the sales number in the month gone by, wherein Maruti Suzuki is expected to post a double-digit growth, almost 14% jump on a YOY basis, and even Mahindra & Mahindra, though the company is already having high waiting periods for its select models, no significant discount has been offered, but yet again 13% jump on a YOY basis is what we are expecting. Coming to the two-wheeler pack, then there the results could be really good for just select players from the likes of TVS Motors as well as Eicher Motors Royal Enfield. We are expecting a double-digit growth, but for Hero MotoCorp, once again, this company is seen to be taking a backseat, where we are expecting a decline on a month-on-month as well as on a YOY basis. When it comes to the commercial vehicle segment, then you will see that all these companies can post a strong double-digit growth on a month-on-month basis, but that could actually come on the low base of the MHCV segment specifically. So some green shoots visible in the MHCV segment as well. And lastly, from the tractor division, all these companies have been highlighting that the on-ground farmer sentiment has been holding well, and specifically for M&M tractor division, we are expecting a jump of 14% on a YOY basis. So all eyes on the auto sales data.
Well, absolutely. All eyes on the auto sales data, but shifting focus then to an 18-hour exclusive, the government is planning to launch the Golden Hour treatment program that will provide prompt medical service to road accident victims. In fact, insurance companies have also raised nearly 500 crores for a fund that will service medical costs of people affected from these mishaps. We do have Anurag Shah who is standing by with more details. Anurag, give us a few more details about what this treatment program then looks like.
In New Year, government is all set to launch a Golden Hour treatment scheme for road accident victims, and as per our sources, Prime Minister Narendra Modi is going to launch this scheme nearby to Republic Day. So this scheme offers 1.5 lakh rupees of cashless treatment or 7 days of hospitalization to road accident victims, whichever is less, under this scheme, and around 495 crore has been collected by general insurance companies for the motor accident fund. So insurance companies are contributing 1% of their third party premium. Insurance companies recently paid around 88 crore as GST also, although in a recent GST Council meeting, GST Council has proposed to exempt GST for the premium contributed for this fund, but that is a prospective announcement and not retrospective, and insurance companies are already paid around 88 crore for GST. As we know that in India around 500 lives are lost due to road accident, and Golden Hour treatment can save 50% of these deaths, and in April 2024 pilot project of Golden Hour treatment was launched, but now Pan India project is getting launched by government, which is funded by general insurance companies. They are contributing 1% of their third party premium for this motor accident vehicle fund.
All right, but moving on, let's put the spotlight on Kei Industries, as we spoke with the management, and he says that there hasn't been a slowdown in the energy sector, and those are the words coming in from Mr. Anil Gupta, who is the CMD of Kei Industries. Let's go across and listen into what else he had to say.
In the energy sector, we have not seen any slowdown, because it is not led by only the government spending, but it is mostly led by government as well as private spending, especially by the solar developers, solar energy projects, and data centers, new industries coming up, and especially the transmission and distribution sector has been strong. A lot of distribution companies are now privatized all over the country, and even in the government sector, the distribution companies are executing RDSS projects, so which are having substantial portion of cables which needs to be undergrounded. So overall, and even the real estate sector is stable and doing well. As far as retail is concerned, we review the pricing around every 15 days and take the decisions of lowering or upping the prices every 15 days. And so far as projects are concerned, we are always carrying inventories with respect to the order book. So we have not seen much of the margin erosion due to raw material fluctuations on the cable side.
And that was a word coming in from the management at Kei Industries. But moving on, then a whole host of cues and changes await the street as we enter a brand new year, from auto sector's price hikes coming into effect to the much-awaited Mahakumbh Mela as well. Let's go across to Varun, who's standing by to take stock of all of the action. Varun, tell us which are the dates that we should then be marking on our calendars in January then?
Well, so there are several events which are lined up for the month of January. Let me start with auto companies, because they have already announced price hike in the range of 3 to 5%, and this price hike will be applicable from 1st of January. So keep an eye on auto companies. Also, January is the month of earnings. So the Q3 earnings will be announced in the month of January, and you have seen in Q2 there were several sectors which have actually struggled to deliver. Now let's see in Q3, is there a revival or the struggle continues? Also, on 13th of Jan, the Mahakumbh Mela will start and it will end on 26th of February. Coldplay is coming in India, and the events are lined up from 18th to 21st of Jan. So keep an eye on this. Also keep an eye on global event, and the most important global event is Donald Trump taking charge as the 47th President of United States of America, and this will happen on the 28th of Jan. And many are expecting that this would result in trade wars, especially there are chances that Donald Trump would impose tariffs on China. So this is an important global event that you need to keep an eye on. Keep an eye on India's bond market because India's FAR bonds, they are going to be included in Bloomberg Emerging Market Index with an initial weightage of around 10% on 31st of January 2025. Also keep an eye on FOMC meeting because that is scheduled to be held on 28th and 29th, and you have seen continuously 3 times Fed cutting interest rates. So let's see what Fed does this time. Also keep an eye on budget because on the 1st of February you have budget in India. Before that the economic survey report would be tabled, and it's an important report that you need to keep an eye on. So there are several events which are lined up in the month of January. Keep an eye on all this.
Alright then, thanks Varun for getting us that update. Well, Srishti, it does look like there's a lot to mark on our calendars come January, but with that, that's all we could pack for you on the last edition of Your Trades for this year. We'll see you next year, same time tomorrow.